How we doing, Facebook? Happy Monday. Let's verify that we have things up and running here. So I've been getting bombarded with messages about our new credit repair program, which I'm excited about because we can definitely help a lot of people. But for those of you that are on the fence or debating or whatnot, there's some things that I want to show you, and really it's just simple math, things that you need to understand, just how much of an impact having bad credit affects you financially. And we're just going to use one example out of probably, I don't know, a dozen different examples as far as how much of a negative impact having bad credit will ultimately affect the amount of money that you spend on things. Because at the end of the day, why do we want to have good credit? What's the purpose of having good credit? Really, the purpose of having good credit is for you to be able to leverage money at a low interest rate or no interest rate at all. What is leverage? Leverage means you're utilizing somebody else's money. In this case, when we say somebody else, we are referring to financial institutions. We're talking about banks. We're talking about credit card companies. We want to be able to use other people's money to purchase the things that we need or the things that we want at a very low interest rate or no interest rate at all. Why do I say no interest rate at all? Well, because, like me, for example, I have taken advantage of so many promotions where I pay no interest whatsoever. Sometimes it's for 12 months, which usually the 12 months, that's like Best Buy. Best Buy, for some reason, it's very rare for them to give you more than 12 months no interest. From time to time, Best Buy will give you 24 months no interest, but it doesn't happen often. I've been able to leverage Synchrony. Synchrony is a powerhouse in the credit space. I've been able to leverage Synchrony at 5 years, no interest. So I've been able to purchase things same as cash, pay them off over the course of 5 years, and not pay any interest whatsoever. So having the ability to leverage institutions' money for the things that you need or the things that you want is a very, very powerful tool that you cannot utilize if your credit sucks. You can't utilize it. You don't have that power. You don't have that purchasing power. So what I want to do is I actually want to show you some numbers. And so the example that we're going to use today is just purchasing a car, just purchasing a vehicle. So let's take a look at that. Let me share my screen here. See if I can make this a little bit bigger. Perfect. So let's take a look at this scenario real quick. And am I still? I always like to check, make sure that this live is working well. Okay, we're good. So let's say you want to buy a car. And we're not going to buy anything too fancy. Let's say we're going to buy a car worth $26,000. That's what we're going to finance. And so there are some dealerships that will finance a vehicle for you regardless of your credit score. I think one of the dealerships that I see doing this often is like a Charlie Clark Nissan. We're here in the Rio Grande Valley, so I've seen them do this. Okay, so let's take a look at this. You can get the loan over the course of 6 years. Now, let's say your credit is awful. And let's say they're going to give you an interest rate of 9%. So you are financing $26,000 over the course of 6 years at a rate of 9%. So let's calculate that. So that's a total of 72 payments. Your monthly payment is going to be $468.66 per month. We're going to pay this off in 6 years. You originally committed to borrowing the 26,000, but because of interest rate at 9%, you end up paying $33,743 out of pocket by the time you're done after the 6 years. And so the total interest paid was 7,743. Okay, so let's take a look at that number. 7,743. Okay, that's how many thousands of dollars on just one transaction. This is just buying a car. This is not including all of the other stuff that you guys try to buy. This is not including furniture. It's not including uh, I don't know, a computer or whatever it is that you purchase for your day-to-day life or day-to-day usage at home or at work or whatnot. Okay, so this is just one transaction. Now let's take a look at the same transaction, but instead of paying 9%, we are paying 1.99%, which a lot of you guys may not have been able to take advantage of this at any point in your adult life up until now because you made some bad credit decisions, but a lot of people can take advantage of a 1.99. A lot of people can actually even take advantage of a 0% uh, interest financing. But let's be a little more realistic. Let's say 1.99. Same 26,000 over the course of 6 years, but now we're at 1.99% interest. Okay? What you end up paying in interest over the course of 6 years is 1,604. So in the other example, it was 7,743 at 9%. That's how many thousands of dollars you paid in interest. And this one is 1,604. So we take 7,743, which was the interest at 9%, and we subtract that 1,604. So that is a difference of $6,139 that you paid to a financial institution in interest because your credit was not optimal. Your credit was not good. And that's just one transaction. That's $6,000. So now let's take a look at this. Repeat it over and over the course of 10 to 15 years. You take it a car for you take it a car for your wife or your kids or whatever. How much money are you paying the financial institutions to be able to borrow? And that's if they actually loan you the money. Depending on how bad your credit is, some of these entities may not even consider loaning you money, even if it is at 9% or 12% or 15%. So this is a problem. It gives you very little purchasing power, or if you are actually able to get some purchasing power, if somebody will actually approve you, it's in conditions that are favorable to them, not necessarily conditions that are favorable to you. That's why this is important, ladies and gentlemen. That's why you need to stop putting this off. You need to figure out how it is that you can take care of this right now. Now, I think that in this industry, a lot of the times people are very hesitant. And I'm going to be 100% honest with you. Before I really dove into how it is that you can remove bad credit marks from somebody's credit report and really start improving their credit. Before I really got into it, which I just got into this recently with one of my business partners and good friend George, which George is really the mastermind, the one that understands this really well on the back end. Before we got into this, I was very skeptical. So I was of the mentality, hey, you know what? If you defaulted on something, I mean that's your debt. Now, there's not really a whole lot that you can do about that. But actually, realistically, there is. There is. Now, I will also tell you, regardless of whether you decide to do business with us or not, regardless of what decision you decide to make, I will tell you that in order for this to work, in order for us to be able to pull you out of that slump and be able to make your credit better, you have to now have new disciplines and new guidelines in place so that you're giving all of your payments on time. You're not giving late payments. You're not defaulting on anything. I want you to think of your credit as a fire. It's just a fire, a burning fire. That's what your credit is. It's the burning fire of hellish high interest rates. Is what your credit is. What we're trying to do is we're trying to put out the fire. We're throwing water. We're throwing water. We're throwing water. Eventually, we're going to be able to put out that fire. The problem is that if we start the process and we're trying to put out the fire by throwing water, and you're giving late payments, it's like we're throwing water and you're throwing gasoline. And it's very, very difficult to get you to where you need to be. That's why we always have a clarity call. The purpose of the clarity call is to see where you're at. We want to make sure that it's the right fit for you, because the last thing we want to do is enroll you in a program and then 6 months or a year later you say, hey, it didn't work. But the reason why it didn't work is because you didn't abide by certain disciplines that you had to abide by to be able to get you to where you need it to be. So that's very, very important. Having the transparency, having the communication, having the clarity, keeping you in the loop so you understand exactly what's going on, having you be able to monitor the progress, being able to see over the course of time how your credit is changing. All those things are very, very important, and it's part of the overall process. It's not a short process per se. For some people, it could take a few months. For some people, it could take a year and a half. It really just depends on how bad you screwed it up. But I'm here to tell you that there is a way. It is a process. It does take time. I'll tell you that the goal of all of this, and really the reason why most people want to fix their credit, is because they want to buy a house. That when it comes down to it, I'd say 9 times out of 10, for most individuals, it's they want to buy a house. So let's take a look at that for just a second. If we consider just how much property values have gone up over the course of the last 2 years, if your credit would have been good 2 years ago, I guarantee you would have been able to get into a home 2 years ago, and you'd already be super positive on the equity of that home, because property values have gone up so much. But the problem is that if you didn't do it 2 years ago and you're trying to do it now, hey, it can still be done. Hey, it's still going to be helpful. But property values have already skyrocketed, and they're probably only going to continue to go up from here, which means that the longer you wait to fix your credit, the more you're losing out on an opportunity to get into a home at a lower price. And that makes things just more difficult in the long run. Procrastination, saying I'm going to do things one day and then you just keep putting it off. Procrastination, indecision is the worst decision of all. So just understand, bad credit will cost you thousands and thousands and thousands of dollars in terrible interest rates until you take care of it. And when you take care of it, then it's going to make a world of difference, and you're going to be able to do so many more things. Why? Because now your credit is in a much better place. If you guys have any questions, send me an inbox. I'm here to answer any questions that I can answer. We're here to help you. We're here to get you to where you want to be. And we also have a mortgage company. So as part of our financial institution in our group, we have a mortgage company. So we can actually take you all the way to the end to be able to then apply for a mortgage loan and be able to actually find you your home. And we have a group of real estate agents that we work with on a daily basis that can help you find the home that's within your price point. So we can really take you all the way to the end if what you're wanting to do is purchase a home. If that's not what you're wanting to do, you already have a home, you're just wanting to build your credit so you can do other things. So maybe you can go and take out your dream vehicle, take out your dream truck. You can go and a lot of people have told me they want to take out a business loan because they want to start a business. Whatever it is that you want to do, the opportunities are there, but we have to take care of the fundamentals first. What are the fundamentals? We have to fix your freaking credit. You cannot do anything. You have no purchasing power. You can't accomplish anything unless we first fix your credit. All right, guys, you have a beautiful Monday, and I'm going to bring you some more good content. Thank you.